All right, today I want to talk about how trading was hard until I realized these two big things. And after I realized and changed these two things, it became exponentially easier. And I decided to talk about this today because of how easy my trading has been going lately. High win rate, low stress. I'm not in the charts a ton. I'm not stressing. It's all just like flowing very easily. And because of that flow, I was reflecting back on the last 2.5 years and noticed that there were two pivotal things that once I changed those two things, or once I changed each of these things individually, my trading became like next level easy. So I don't want to babble too much. This is totally unscripted. I just want to dive in and get to the good stuff. So the first thing here, I needed to know how to read price before trading. And I know that this is not what anybody wants to hear, because of course the exciting thing is how quickly you can enter a position and make money. And all you need is a trading model, right? And for example, I just gotta, all I gotta do is go long right here. And then look, I'm gonna make, whatever this is so far, I'm gonna make 5.3R today. Like, that's exciting. And you sit here and you click and I get it, it's dopamine. But the problem is, this means nothing, okay? The candlesticks are a language and we need to know how to read them. And if you're entering trades without knowing how to read the candlesticks, it's basically like trying to write poetry in a language that you do not understand. So it's important that you can read price without indicators. Indicators are lagging. RSI, MACD, they're all lagging. They mean nothing unless you actually know what these candlesticks are meaning. And that's one level of stress for traders is first, they want to trade. So they're like, oh, I don't know, there's an order block here. So I'm gonna short this, right? And they go and short this and then they lose. And they go, oh, here's an order block and we're in premium. I'm going to short this and they lose. And here's an order block and they short this and they lose. And here's an order block and they short this and they lose. Here's an order block. They short this and they've finally win, but they've lost so many times, they just cut the trade halfway, right? And that's because taking trades is stressful before you understand what the market was doing, okay? Once you can read the language, oh no, I moved my box. I'm giving away my secrets. Oh, come on. Once you know what the market's doing, more than likely, because of course no one knows for sure, but once you know what the market is doing or will likely to do, it becomes less stressful. Today was an example. I wanted to see market make a high for the end of the AM session, somewhere up in here. I wanted to see a retracement and I wanted to long it. And that's exactly what I did. I didn't have too much stress in the trade because I knew what the candlesticks were telling me. Now, what does that mean? That means understanding how to read order flow. And I personally use ICT concepts. There's, of course, a few different ways that one could learn how to read these charts. But what the big thing for me was once I stopped trading and I took about 3 months to learn how to read these candlesticks. So as every candle formed, it gave me some new information. I could look at this and go, okay, cool. Here's an inversion fair value gap, and then here's an order block and here's a breaker and so on and so forth. Once I could look at these and it spoke to me like a language and it was no longer any mystery, that really helped my trading. It didn't turn me profitable or anything, but it removed some major barriers to my ability to pass evals, become profitable, etc. So that was number one. And now number two. And I think this one is huge and highly underrated. And I'm going to catch some flack for this, I'm sure. But let me explain before you start making any comments, okay? The second is I needed to trust my model and trust my data. Oh, wait, I didn't have the data. Well, let me explain this a little bit. So obviously, if step one, if you know how to read price and you know relatively where the candlesticks are going, and let's say you have a trading model, and I'm skipping that one because there's lots of trading models, whether it's a 2022 model, an inversion, traditional retail concepts, like whatever. There's models. That's irrelevant. You can win with any model. But all of these models will have the same problem. Once you have a model, if you don't have trust for it, you're going to fail with it. And how do you get the trust for it? Is you have the data to back it up. But then that creates this vicious cycle where like you're sitting here in the charts, you know how to read price, and you have a model that you know what to look for, but you don't trust it. So then you make erratic decisions and you start introducing behavioral variance into your trading and into the charts. So, and I think of an analogy is like, imagine if you're getting into an MMA ring or a kickboxing ring at a competition and you've only just attended a couple of classes on the basics of kickboxing. Like, you are going to get your butt handed to you, right? That's the same kind of thing. But if you had gone to hundreds of kickboxing classes, practiced at home, you knew what to do when the opponent, feinted or threw a jab at you. You knew what to do. You wouldn't get punched in the face, right? Likely. And that's similar with trading. Well, how do we build the trust for the model and the data? And most people would say, just get in, it's time behind the charts, bro. We got to, get in there real-time time in the charts. Yes, of course, duh. Like, that's just blatantly obvious. But do you want to step into a ring and fight somebody who's been practicing MMA for 6 years when you have been doing it for a month? That's going to be the hard way, okay? And this is where people, I think, underrate backtesting. Backtesting is how we begin to trust the model and trust the data. And what's important to know about backtesting is I think most people do it wrong. What do I mean by this? Is that they get in there, they pick a backtesting software like TradeZilla or FX Replay, and then they backtest for a week or two worth of price action or a month or two. And then they're like, cool, that felt good. I got in some reps. I was green for a month. And then they think that's enough to go into live markets in real time and trust their model. It's not. You don't actually trust your model and you don't actually have your data. So for me, in my second year of trading, this made all the difference in the world. And I started doing this last November, where I started backtesting years of data. And you heard me right, years. I've gone through the year of 2025 from front to start. And I've gone through the year of 2024 front to start. And I've done other parts and pieces looking at PM sessions and other lunch sessions. So probably a third year worth of trading, all condensed into about 6 months of time. And that made a phenomenal difference in my trading. And once I did that, trading became truly easy. And let me show you what I mean by that with some of the backtesting examples. So let's see if we can see this. I want to look at, can't scroll down, so my face is a little bit in the way, but I guess you can kind of see it. So down in here, right here is the year of 2025 backtesting session. And this is where I started. And if we look down in the corner here, you can see my mouse. You can see a red month and a red month. You can't see the P&L total. It says minus 523 and minus 737. And when I started backtesting this year, I was red in February and red in March. And I almost gave up down in here. I'm like, this kind of sucks. I can't trade. But look, I didn't change anything. I just kept going. And I ended up 13K on this year backtesting. Now, sizing wise, I was risking 250 per trade, assuming a 50K account. And then you just, for however many accounts you're copy trading, just double, triple, quadruple, whatever, right? That's how you get the total of P&L for this year. But look at this. 2 hard months. I thought I couldn't trade, but I kept going. And I started to see a pattern here. I started to learn a few things. I learned, okay, 3 red months in the year is not uncommon, and I'm still profitable. Like, imagine how much confidence you would have in your trading if you had a year's worth of data backing this up. Okay? That's big. Not only you begin to know what to expect. How many months are you red? How many weeks are you red? Break even, right? Highly profitable, sort of profitable. You see the patterns, Like, look at this. My high-end month, 4K and 3K. Average month, 1K. Cool. Got a baseline for that. And now look at the P&L calendar, right? And we'll let's not do December because that was a partial month. But even look, I trade about 50% of the days. A little more that month. A little less this month, right? That's like maybe 30% of the days I took trades. Imagine how much confidence you would have in your trading system if you knew how much you should trade if you were profitable. So that's how I'm able to break this down and look at like, cool, I was nice and profitable this year. And I only traded, I think I did the math. I think it was like 52% of the days over the course of the year. Huge, right? And I did it again. I did it for the year 2024. And I had even better results. This time it was 100,000 in profit. So this was assuming copy trading half of my 50K accounts because I wanted the size to equal the risk. So in this case, I was just getting my feet wet. I just wanted to feel what it was like to risk the 250 that I see on my screen, right? When I'm trading one of my 50Ks. And then this next year back testing, I risked what I would see with the copy trader running. In other words, 9 50K accounts copy traded. So that way, if I lost, I took a $2,000 loss. I could see that and feel that. And here's the results. You know, we can see a 54% win rate, right? Trade expectancy, $476. So now here was year 2 of Confluence. And this here, it gives me hundreds probably of trades. I don't know how many do we have here. Yeah, there's almost 200 trades in this 1 year. And of course, there's all kinds of data tracked behind the scenes, you know, screenshots of the trades. Everything I needed was in back testing to be confident in real-time trading. I had the data. I trusted my model in back testing. I had years to prove that I was profitable in back testing. And of course, that does not guarantee you're going to be profitable live trading. Of course not. Oops. That just removes the variables because I know it's not my model. I know it's not my ability to read price. I know it's not my ability to execute in a backtesting environment, right? If there's problems, let's say trading. The only thing at that point is going to be your next obstacle. And I'm not really highlighting this in the video here because I think that it's a little separate. But the next obstacle, once you know all of this, is basically behavioral variances within live trading. But that's another topic for another video. These were just reflecting on 2 of the biggest things that made trading easy for me. And these are not the sexy things. These are not the things that people are really going to want to like do. But it's, if you want to win at trading, you have to be willing to do what other people are not willing to do, right? You're not going to win trading by signing up for a Discord that gives you signals. Like, cool, it's okay for a little bit to copy someone and just to get the vibe of it, right? Like when your instructor in kickboxing is slowly working through a combo with you. That makes sense. But they're not going to be in the ring with you sparring, right? You need to be able to know how to do it yourself. And this is how you get there. So I'm going to wrap it up here. I hope that was helpful. If that means anything to you, if these are things you realize you haven't done, comment below. I'd love to hear from you. And see you in the next video.